Can you hear me? Can you hear me? Yes, I can hear myself now. So let me just wonder what happened there. Headset's fine, but let me just plug my headset in. Hello, my friends. Hope you can hear me now. So what I was saying, basically, I'll go back to Bitcoin. Basically, let's go back to the chart. 92,000 was key, is what I was saying. Hopefully, you can see it on the chart. This was key. Cryptos. Let me go back to Bitcoin. How long got? 24 minutes. Right. So bear with me a sec. What I was saying about Bitcoin, guys, was this. What's that? A daily time frame? Yeah, the 92,000. This key level we've been talking about all week. Well, not all week, but for many weeks, I should say, was key, and it was tested yesterday. Given that the US markets were closed, actual stock markets were closed yesterday, we'd had this big shakeout on Friday last week. Tuesday. Sorry, I'm going mad. Following, as we'd said earlier in the week, this 7-day continuous rally, and it was duplicating the move to the upside here following the election here on the 5th. See the big move up here on the 5th. So that we were looking, or markets were expecting perhaps a bit of a pullback. Wasn't expecting as big a candle as we got on Tuesday, but stock markets closed down significantly on Tuesday as well. The S&P was down 6%, wasn't it? And the Nasdaq was down nearly 2%, wasn't it, on Tuesday? So we were down Tuesday, down Wednesday, down Thursday on the closed stock markets, in to test this key 92,000, and then today we've bounced and we're still long here on the hourly chart, is what I was saying, basically. Blah 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 blah. There we go. And the retrace was into this first fib level, not a key fib level, but the first 23.6 fib level is where we've gone to today. So what time is it? Let's check the time. We've got 25 minutes. I've got 5 minutes. Right. We'll come back to these others. Let's just have a look at what we're expecting. Obviously, it's non-farm payroll today. So consensus is around about 160. 160 is the Reuters poll estimate. 165 is the Bloomberg poll estimate. The ranges are 120,000 to 200,000 for the headline non-farm payroll numbers. Today, where's it gone? Here. So headline, say the range is just look at my notes. 120 to 200,000. That's a relatively narrow range. 80,000, to be honest, on that sort of number. Consensus, as I say, around 160 or 165. If you're looking at the Bloomberg consensus, and 140 to 185. That narrow 45,000 range is where most of the professionals, the big investment banks are. So 140 to 185 is where the range is. Anything around 200,000 will be a big tick in the box, and show continuing strength in the US economy. And this week we've had a very, very strong dollar, backed by the strong move in the yield market as well. So that's the headline number that everybody sort of concentrates on. But remember, it's the other numbers that support the detail. The one I really look at that very few people talk about is this U6 number. 7.8% the unemployment rate's got up to. It's a wider measure of unemployment than the headline 4.2%. That's expected to remain the same. Again, the range is up to 4.4% is the range. And earnings, what the pay packets are looking like. Where's our earnings here? 4%. Again, the range 3.8 to 4.1%. And hourly earnings for the month. So I'm reading all then, didn't I, for the month? 0.1 to 0.4 of 1%. So expected to cool from last month. The key figure, the key headline, just going back to the headline number here, the 160,000 is expected. This is a bit of a cleaner month, although it's had the seasonality of the Christmas period. This is a cleaner month. Remember, the last 2 months were impacted. The first, the October numbers were impacted by the two big hurricanes. Then we'd had that combination of strikes in the airline industry and the car industry as well, which impacted things last month. But we've had that big bounce back, 225,000 or 227,000 this time last month. So 160 is what's expected later. But really, it's the yield market, the government yield market. Remember, yields are what the government pay on people that invest in the government, i.e. they buy their bonds. And as we saw this week, the 10-year auction and the 30-year auction have gone at very, very high levels. The 30-year auction went up 4.91% from about 4.5% last time. That was $22 billion worth of government bonds were bought, and I've lost my 10-year number here. I thought I'd written it down in my notebook and I haven't, but there you go. Right, I hope you can all hear me now, and everything's good. Yes, I'm getting comments here. So guys, if there's anything you want to have a look at in particular, let's let me know and we'll bring that chart up. So let's just go back to where we are in a moment. Let's just go back to the forex market. I said the dollar's been very much bid this week. The weakest currency has been sterling of the major currencies. No change there on our daily time frame. We're still very much on our surfboard. Big leg down, retrace, extended leg down into the hugely psychological significant and psychological 125. 124 has been breached this week, and we're under 123, and we currently trade at 123.30 at the moment. So that's great if you're planning to go to in the UK and planning to go to the US anytime soon, or go to Europe anytime soon, because it's bounced down against the euro as well. So 122.25 is where sterling trades at the moment. The trend remains very much to the downside. Here on the RSI, you can see we're approaching oversold area. We are actually under there at 28.28 or 28.80, but remember, markets can remain oversold and overbought for a long time, much longer than you can try and catch that it's going to come back up. We had a bit of a rally here as it came out of the oversold area at the end of November and rallied up into the 20-day, over it for a few days, but then we were down again, and the 50-day has been your big sort of blanket on that one, but really the 20 days played really nicely as well on that. And as I say, so you can see here, the last big cross we had, the big down day that broke back down under the 20-day was back there on the 12th of December, and sterling or cable pair sterling, as everybody, when people talk about sterling, they mean the pound against the dollar has been lower, and again a big three black soldiers this time, as they call it, a candle pattern forming here from a retrace of that big down day we had at the beginning of the month as we went back over 25. And you see here again, see why I thought about the size of the candles are important, because it doesn't matter. I've been doing all that talking and the data's out. There you go. Talk far too much, Mr. Cowell. Let's have a look what the data's looking like. Didn't look like it was moving sterling much, did it? Let's have a look. Oh dear, this calendar does my head in when I'm doing this live. It won't let me take out all the countries I'm not really interested in, with all due respect to them. So it's a big one again, 256. Last month's been reduced from 227 to 212. 256, that's a big beat, much better than expected. It's a top, it's beyond the expectations of the market, remember. Okay, remember, most of them were 140 to 185. Highest estimate was 200,000. I think that was Barclays. I can't remember. Don't quote me on that. But the highest estimate was 200,000. It's 50,000, 56,000 above that. That's a good percentage above expectations. So the headline, this clean number, remember, taking out all the, given obviously it's the seasonality of Christmas works as well. So again, that might have to be cooled off a wee bit, but that's a strong number for the December payrolls, 256. Private payrolls, significant rise there, 225. That's a big hit. That's the one that's really caught me. And look at this. Unemployment, I was talking about the 7.8% on this wider U6. This is strong data for the US economy. On Tuesday, we had those strong set of numbers as well. This is certainly going to bolster the expectation that the Fed might have to don't need to cut rates anytime soon. So or dim that cycle. So we could see a big move in the dollar too. We'll look at the charts in a minute. But that's how I expect the market to interpret this. And unemployment headline, unemployment, it's only down 0.1%, but it's, you know, we're at virtual full employment down at round about 4%. 3.8% is round about full employment. 4.1% down from 4.2%. That's another good number. Across the border as well, while we've got here, the Canadian number is much better than expected as well at 90,000. These numbers are better. Participation rates in line with expectations in Canada, and in inflation. Unemployment has dropped there to 6.7%. It's not going to help the outgoing Prime Minister, Mr. Trudeau, or indeed the Liberal Party. It looks like this is going to be a strong swing to the right for Canada if if the bluster from Trump follows through. They become the 51st state. But classic Trump this week, wasn't it? Talking about buying Greenland, taking over the Panama Canal, not ruling out doing it by muscle if he needs to, and acquiring Canada. What a character. What a character. Yeah, anyway, he's the president of the United States now and the most powerful man in the world. But there we go. So strong numbers. Earnings was a bit interesting, but that sort of feeds into the but it's only slipped by 0.1% to 3.9%. But that's a strong number for the US dollar. And there we go, 122 there on cable. Let me just show you the this initial. Where are we? 5 minutes in now, aren't we? So we've got a 5-minute candle, and there'll be a big whopper down there. We are. A whopper indeed on our 5-minute chart for cable. Euro will be the same. So cable down and under 122. Euro down and into 102.25. Obviously, this is a lot of busy action at the moment. So 122. Sorry, 102.3. We've talked about parity. Kiwi. Oh, let's do the majors first. And dollar yen, look at this baby, 158.80. If we just go back to the yen, this is the one with the biggest disparity in what the central banks may be doing. Go back there go daily on the yen. It just, you know, this relentless rally higher continues, and the 158 area was key resistance as we started the new year here at the end of December, and the new year's been a key resistance. We broke through it on Tuesday. We followed through Wednesday. We held it, although it was a down day yesterday, Thursday, and it's another leg up. So 158.80, and that's continuing to bid to the upside. So it's a strong dollar. Yields will have moved as well. I haven't actually got a yield instrument here I can share with you, but that's a strong move and a strong set of data. And again, here you see the RSI here on the yen approaching overbought levels, but still not quite there, and it's still rallying. There's that high we had back here in the summer, July, 161.80. So certainly 160. Next big significant round number for dollar yen is in a line in the sand. Doesn't mean it's going to get there, but at the moment there's no reason to jump out of that trade at all. Nicely supported. And again, you see how this moving average has held us, but the 20 days all the way down there at 156.58. So a strong trend, dollar yen, strong trend, the euro in the opposite direction, 102.25, below these 2024 lows, multi-year lows now for the euro. And sterling, also, I should have mentioned this earlier, finally broke through its 2024 low in the unwind this week. Sterling and yields, particularly in the UK, have rocketed, and lots of pressure on the Chancellor chatted this morning about them, the UK government having to reassign or realign their financial plans based on this pressure down on sterling. It's not just against the dollar, it's against other currencies as well. Dollar CAD has cooled a wee bit on the strength of the data which has come out of Canada, but again, you can see here a big jump on that stronger non-farm payroll data. So the resistance area we were looking for, what was that? I was so short, wasn't it? I have to take those out. So we talked about that earlier in the week. We take that out. Why won't it come up? Come on. I'll tidy that up later. But anyway, yeah. So 144.25. So that the down move that only happened one day. It suckered us in here. What was it? Was that the 6th? Yeah, 6th. We were immediately out of that. I think we got out. Actually, I can't have to check my records. But anyway, we've certainly been stopped out on that one as it's bounced back. And again, just you can see here today, it looks like it's not going to necessarily definitely happen, but it looks like this 4-day bounce will take out the big 1-day down. So it's still within that day, and we're still consolidating highs, which is positive for this pair. The 20-day moving average is held even on that big down day. So the drift up is back on, and that might have triggered it might have triggered a continuation trade yesterday. I haven't actually checked that last night, but it will certainly add stuff might have been added today as well. So dollar CAD also moving to the upside, so there's no surprises there to the downside. Let's have a look how gold's reacted. Remember, we were looking at that before. So gold 2671, so it's down, but it was still an up day. This is a daily, remember, these today, so it's still a positive day for gold at the moment. But that rally we were looking at before the data came out has cooled and been been stopped out. So if you were let's assume you were trading this on this 1 hourly and you got back in on that big candle there, which is what the continuation trade would have triggered there last night at 6 o'clock. The 9 period is held, it's held. You would have been trailing your stop loss up. Again, I tend not to have, obviously with a big announcement like non-farm payroll, tend to close out these positions, or most traders close out at least an hour before and the actual numbers going out, and that's clearly what was going on here. Well, not clearly, but that was looks like what that was going on there. It might have been your automatic sells at 2680, this round number again. So cooling initially. Remember, we're literally only 10 minutes into the announcement, so we see if and gold is still up for the day. If we go to the as we saw on the daily chart, gold is still positive for the day and positive for the week. So there we are. Let's see, the 4 hour is very much all the way down there at 2662. The 20 period moving average for the gold market, and even the midline, the 9 period moving average is still holding on a full candle basis. Even there, you see, so it's had a strong old run here from that last cross there. At 7 o'clock on the 7th, the 4 hour gold traders are still long, unless they got a stop loss a bit too close and been wiped out on the non-farm payroll. But most will have closed out and looking to re-enter, potentially see how this candle closes. That is strong data, or more strong data. So let's see where they can go. Let me just see if that actually changes anything with regard to the CMC expectations for interest rate changes. It's obviously a bit this free one. It's not really. Let me just bring that up here. Nice little tool list. Remember, what's that? Anticipated. There we go. This is given for the 29th of January, unless something serious happens between now and then. Obviously, the major thing is the inauguration of Mr. Trump on the 20th, but 29th, the Fed expected to sit pat on rates, but the more active one was March. So there we go. It's now jumped to 71%. If we look at this one, there we go. We look at this one now here. So here a week ago, even yesterday. Yesterday it was about 56%. It was 50-50 a week ago. Yesterday it drifted to 56. Now we're at 71. Strong data. Strong data cemented by today's non-farm payroll has added to that chance of no change on the 25th. Sorry, on the 19th of March as well. Yeah, it's strong data. Let me just check comments elsewhere. See what anybody else has got to say. Obviously, this season, yes, I say it's December, it's seasonality as well. So it's a big old boost. I'm not seeing any comments here. So it's yeah, 256, so nearly 100,000, better than expected. Strong one and runs against all the other main servers, which haven't been anything spectacular. The US dollar is soaring on the headlines with moves of 80 to 100 pips across the board, as you saw. So that was the bull dollar traders, which we've been, as a trend follower, it's been that way, as we've seen for a while, has just benefited from that very strong payrolls data. If we look at the indices, they would have come under pressure again. So remember, they were closed yesterday, although a market was made in these derivative markets. So here on the this is the just go to the, where are we? Yeah, 15-minute chart is about to finish. So I do the 10-minute chart. You can see what a big dump we've had here on the Dow, down to 42,400. Sorry, 42,340 from 42. We're all the way up there at 42,600. So a 300 pip move or point move down on the dollar. The Dow, not the dollar. Sorry. If we've got we've got the indices here. So we look at the dollar index, 109.50. I can't remember the last time it was up here at 110. We got how high did we go on the immediate announcement? 109.80. So a huge lift for dollar. Its major competitors, which compose this dollar, create the dollar index, very much under pressure. Had been under pressure anyway, for lots of other reasons other than the politics of the current world we live in. But yeah, dollar very much still the one. How much further it's got to go? Let's remember, that's why we make our money. It's this part of the chart, this bit of what's going to happen next, not what's happened. It's criticism I get all the time as a technical analyst. It's all right to talk about what's happened. It's telling me what's going to happen. But if we just go to let's just go to the daily and let me finish this thought process. In fact, let me go to the weekly on this one. So strong dollar has been rampant or been positive here since October, September. Massive week here at the end of September, having weakened significantly up from the Fed's actions this year. So from the end of the summer or the middle of the summer, we not drifted lower, it's significantly lower. But since the end of September, as volumes have come back, we've rocketed. So here on a weekly chart, RSI runs at 72.35. It's you can't really tell from here, but last time we were overbought was back here, and look how we recovered there when we got up to these highs. So this was October 2022, where we went to 112, 113, 114, wasn't it? It was the ultimate, the absolute high in September 2022. So we're back to this sort of level, overextended. So watch that as we go over the next few weeks. As I say, many are seeing, and I tend to agree with them, that the actual pivot point from the 20th on, when Trump is actually in the White House, and what are these policies going to actually look like? What are the tariffs going to look like? What is his crunch on immigration, migration going to look like? What's that impact into obviously the US jobs numbers, and how the consumer feels, how businesses feel, and how the rest of the world deals with it. We'll see over the next few weeks, but certainly dollar very, very much well bid. Nasdaq 100 back from 21,000. We're at 20,900, so it's another down day. If we look at that's weekly one. Sorry, that's the hourly chart. Go to it. Sorry, daily chart. So we've been back under the 20-day moving average, and Thursday's derivative action took us under the 50-day moving average, which is interesting. And this is quite a significant down day today as well. As we say, we haven't been under the 50. I've been saying all week, we haven't been under the 50-day until since this September action here at the beginning of September. as the dollar was weakening. The dollar's improved since then, and stocks have moved with it. Here we've got quite a significant break. We're interested to see how this weekly candle ends and today's candle ends. So 21,000 being breached on the Nasdaq 100, a key or what was a key support zone. We're under it actually, or sort of right into it at the moment, having breached the key 50 day 50 period moving average around about this 21,200 level we were talking about earlier in the week. So stocks remain pressured. The wider and most important S&P 500, the SPX 500 as you call it here, into a big support area as well at 5,800, testing again to the downside and down today. So stocks are down, the dollar's up, and let's have a look at Bitcoin, gold, and oil. And if there's no questions, I'll wrap it up after that, my friends. Certainly. So let's have a look. That's our indices, our metals, and we'll have a look at have a quick look at how we've done this week with what trades might trigger tonight. Many people said to me actually this week, wasn't this week, it was last week, wasn't it? I meant to mention it last week, about trading on a Friday afternoon or Friday night. I mean, lots of people, intraday traders, don't do that. Oops, lost the connection. Attempt to reconnect now. I don't know whether I'm still connected or not, or it was just the fact that I opened up something else. It might have been that. Hopefully I'm still here. Please let me know if you haven't bored you stupid. But it might have been just switching this other workstation on that's triggered that glitch. Get rid of that. Get rid of that. Should be done because it's not connected. Got my other system over there. Swirling around. Anyway, let's have a look at how gold is done on the back sheet as well, on the stronger dollar, but perhaps less so than the stock market. So again, still an update for gold quite significantly. The hourly chart is that was a down one. That was selling of this, presumably ahead of non-farm payrolls. Massive, very interesting. There we go. Some significant gold panic buying or panic selling. Again, could be buying this down here, but it's still down for up for the day. The volatility of non-farm payroll. Got to be very careful trying to trade non-farm payroll news, guys. Yeah, there are techniques to do it, but be very careful, as I say. So down, we're back up in this 5-minute chart. Where are we? We are 53. So the 15-minute chart. There we go. 15-minute candle. Look at that violent variation, volatility, the range we've had in the gold market. So yeah, depends where your stop loss was. If you didn't have a stop loss, you're probably panicking a bit. Hope your margin call, you didn't call a margin call or anything like that. But yeah, wow, big move. But overall, let's just take the impact of again. We look at the impact of non-farm payroll here on the daily candle is obviously somewhat muted, so it's still bid. So end of day traders or even 4-hour traders will be waiting for that to cool and settle and see if this trend, this up leg this week we've had continues as we move into the second half of January. So gold up and still holds its gains. And we'll just go back to where we started, which was Bitcoin, excuse me, down today, which is in line with, up today. But, the big line is that 92,000, but a big sell-off on the data. And here on an hourly chart, it's back under the 50-hour moving average there at 93,800. To the downside, so maybe some more momentum. There may be some buyers possibly through this level here, 93,000. See if that gets. It has been tested on the data, the non-farm payroll, but see how Leicester Friday and the weekend coincide. So if I just have a quick look at my system here over on my other workstation here. Where are we at the moment? Well, currently today, on the slow, sorry, the fact that, let me see this first. Just refresh it after the data. I'm looking potential trades. There's 4 forex trades. Sorry, 3 forex trades potentially, and a Nasdaq trade currently. Nasdaq will probably be a short position or another short position potentially. Yeah. So this hasn't been great recently. It went long. My system went long here on the 26th, which didn't work out. It went short on the 31st. If you were still trading then, it got about 50%. It actually got to its first target then, and then retraced. It went. So that was so it was a loser, a winner, a loser, because it went long again on the 6th. That was that Nasdaq one we saw. That was a losing trade. But now it's triggering short this system potentially tonight on the Nasdaq 100. But we're at that key support level at 21,000. So anything could happen, obviously, in the cash session, which is still half an hour away. And there's still some data today before the week wraps. Obviously, we've got the CFTC that necessarily affect the Nasdaq. So Nasdaq looking to go short. So the other positions, the other forex positions, involve the Swiss franc. So Aussie Swiss is a potential trade for tonight, which is a short position. Stop loss is too close, so that's not triggering at the moment. Aussie Swiss, Euro Swiss, also short. Oh, sorry, Euro Swiss is long, obviously. But stop loss is too close at the moment. And Kiwi is the other one. Kiwi Swiss also short, but again, the stop loss is too close, so that won't trigger. So Nasdaq possible end of day trade tonight. So that's all that's triggering around over there. If we just have a quick look at the big movers today, obviously the dollar's become rampant. And I'm just interested to see which one it's the worst again. So it's it's the 3 that were struggling this morning. So the Kiwi is actually the worst of the major crosses this morning. We didn't actually look at the Kiwi, did we? Not many people trade it, so I don't talk about it. But you can see the trend remains, very much set, as we said before. So this is the worst of the major currencies. The Kiwi against the dollar, US dollar, .5550 has been breached, and in fact we went as low as .5540 or 4020 on that data. Again, if we got the daily time frame, it's just a no-brainer from a trend following point of view. Big down date. There we go. That was US inflation date. We'll come to next week in a minute, and we'll do it again on Monday. But big down day on inflation next week. We've obviously got US inflation, but we'll come to that in a minute. But continuing to decline. Big moves against the Kiwi as a weekly. So the weekly was been short since October 14th on a weekly basis. So that's very much the bias to the downside for this second half, this final quarter of the final quarter of 2024 is very much a dollar bid situation. So 55, all the 5s for Kiwi at the moment, the worst performer of the majors. The other bad one is the Aussie. I think we did look at the Aussie, didn't we? 61. Actually, I don't think we did we? 61.50 at the moment. That's a weekly chart. As a daily chart, looks just as miserable if you're looking to go to Australia, looking to go to the States from Australia. So your money's not going very far. And the 4-hour, a brief spike here on the 7th. We've been down, and they say the 4-hour chart last triggered short at 1900 hours on the 7th, and it's been short ever since, and a big one down, breaking this low, the January low They're at 61.85 significantly today. So that's a negative one. And then the hourly chart, exaggerated move on the data today, down, but the trend remains to the downside. They're the three weakest performers against the dollar: the Kiwi, Aussie, and sterling. We looked at sterling earlier, didn't we? Guys, if there's no more questions, I will wrap this up. But before we go, let's have a quick look at what's on offer next week. I'll just do this for next week. Tidy this up. Let's do the filters first. Interest in Brazil, Italy out, leave France in, Russia, Spain. If anybody knows how to save these changes with this calendar on Visting.com, please let me know, because it refreshes all the time. I'm not really interested in that. Chinese data I'm interested in. Japan, South Korea. Not I watched the final. I watched finally, I should say, speaking of South Korea, I'll come to actually South Korea's quite a good point. I watched the final episode of the first series of Squid Games last night for the first, well, not the first time, but ever. Very strange program. I'm quite sure why it was as popular as it was. It was very, very silly. But to see what happens with the second series on there. And just while I'm on talking about South Korea, it was an interesting bit of news I saw yesterday about institutional traders in South Korea were looking to be allowed to trade cryptocurrencies, particularly Bitcoin. So institutional traders in South Korea looking to trade Bitcoin. Is the rumblings around. So again, it's another positive tick in this crypto story that we seem to be had a obviously backed by obviously Trump's new arrival back in the White House. So let's have a look at next week. Where are we? 12th to the 18th. Apply. And it's inflation is the key one, isn't it? US inflation is the big one next week. So over the weekend, balance of trade from the Chinese. Obviously, watch that. The inflation was in line with expectations. The PPI was in line with expectations. Yesterday, Monday is relatively quiet. Interesting beige book chatter on Monday. Tuesday, we got the German and the European sentiment numbers, the ZEW sentiment numbers earlier in the morning. PPI from the US. PPI is ahead of, what's to do with the holidays, isn't it? PPI ahead of CPI. It's strange. But anyway, Tuesday, PPI, oh, well, it's according to this calendar. So let's see what it's how it pans out. But the data of the week is the not the English, not the British, sorry, English, not the British inflation, but the US inflation later on in the day. Obviously, we'll be live for that, see what sort of impact that has. 2.7% is the headline number. We've got Empire State manufacturing numbers as well. Wednesday. So Wednesday is our big event of next week. Inventories also still, oh, they are normally on Wednesday, aren't they? Yeah, sorry, it's not moved. Lots of chatter. Williams, very significant. Kashkari, big old hawk that he is now. Williams again. I noticed on Tuesday. Yesterday it was the turn of Harker and Collins pushing the narrative after the minutes came out on Wednesday that we're still looking to get to this 2%. Obviously, that goes without saying, but still waiting for data dependent, and we're cooling now. See what mentioned Trump directly, but obviously waiting for the new incoming administration. Thursday continues retail sales numbers. They're not as influential as they used to be, but still quite key. Philly Fed index, obviously weekly claims as well. So Thursday, Wednesday, Thursdays are two big days. Fridays, GDP from China, retail sales from the UK, inflation out of Europe on Friday as well. So yeah, got some significant events peppered throughout next week. The top of the shop, as I say, will be the US inflation CPI data here, 13:30 or 1:30 GMT, Universal Standard Time, wherever you are in the world. UTC is still London time. So we'll be live for that, obviously, on Wednesday. So take care, everyone. Let me just leave you with our. Oh, where's my website gone? What's my website? Is it gone? No, it wasn't that one. Oh, let's take it back from here, can I? I was just going to show you our latest challenges. We currently have a coupon, which is I've lost it. To do with it. Thought I'd written it down earlier. I had. For our challenges, it's 15% discount across the challenges for the coupon code, and it's not welcome 25 or festive. It's oh dear, what's the code? Let me just double check here. Sorry, just bear with me a second. Thank you, 15. I should have remembered that. Thank you, 15. We'll get you a 15% discount on our range of or the cost of taking a challenge with us. So $85 for a 10,000, as I say, you know, my for it's 25,175. Remember, you know, we our profit shares start at 80%, go to 90% across the board. We pay out weekly. We, you know, we're open, we're clear, we're real people. We're not made up. You know, I'm here. I'm in my home office today. I'm not actually at the office in the UK today, but I'm at my home office. It's Friday and the weather's bloody cold. We're here to help you guys, you know, and you know, do follow us on these live events. Watch our videos, read our articles that we put up on the website, and we want you to be successful, because if you're successful, you know, we're successful. It's a two-way reciprocal deal. And again, you know, there's different ways of doing this. You know, most people go this two-step approach. Follow the rules, and you can be successful. There's no guarantees in this life at all, of course. But you know, too many people rush into trading. They see the appeal of prop companies being this, you know, it's relatively cheap. To get started, but they don't understand themselves, and they you know, don't understand what, you know, what these numbers, what a 10% loss means on a small account. Will still be even though it's written down here clearly, you know, big numbers here on even on a, you know, $25,000 account. You know, you don't want to be losing 10%. Always thinking in percentages. I've always said that to people, everybody I speak to about trading. Think in percentage. Try to take the dollar number out of it, and it will help with your subconscious, your psychology, because that's the major challenge that most people have, is the idea of I was going to try and find was I going to the idea that you know, they can't deal with losing, or they get too excited when they're winning. But yeah, this is a, you know, this is our mantra, guys. So and this happens, you know, these unlimited payouts happens weekly basis as well. 90% profit share. We're here 24 hours a day. So or our support's here 24 hours a day. I'm not here 24 hours a day. But anyway, take care. Have a great weekend, everyone, and hope to see you next week. I hope you've benefited from that non-farm payroll data. Let me just leave you with the euro, the miserable euro. It's bounced a wee bit, but not much, has it? It's 50-minute chart. Yeah, there we go. 102.48 as we close. Gold 2684, so still up for the day, but down. Sorry, yeah, up for the day still, and interestingly, up in these two 15-minute candles, even though the dollar's been very, very well bid. So gold bounced back, unlike euro, sterling, or the Aussie in particular. So if there's no questions about anything at all about our prop firm or challenges, The market itself, I will let you go. Thank you for that, Kat. I had written it down, but I missed it. All right. Take care, everyone. See you soon. Have a nice weekend and be safe. All the best. Bye-bye.